I'm so delighted to be here with you. We're going to introduce our panel in a moment. If we step back and ask ourselves what's going on in this world that we're working in financial innovation, basically we're in the process of digitizing finance, and right behind that, we're also digitizing financial regulation. We're all thinking about the former, but I think we don't think as much about the latter. But the same trends that are driving transformation of finance itself, new data, AI, new data analytics, is going to transform financial regulation as well. And we're actually creating a new generation of digitally native regulation and even some digitally native regulators. I'm a former bank regulator myself. I believe that the people we're going to have on this panel and their colleagues around the world are going to make or break the success of fintech and financial innovation in the years ahead. If they get it right, we're all going to flourish, and if they get it wrong, good innovation will be stifled and bad things will happen. So I want to ask you to join me in welcoming them. As I do that, please also go into the app and plan to ask questions. I'll have the iPad and can be looking at those, and we can pause for your questions as we go. So please join me on the stage. Our first guest is Mark Adams from Australia. Martin Etheridge from the Bank of England. Nick Cook, who heads RegTech at the Financial Conduct Authority here in the UK. And Richard Tang from Abu Dhabi. Thank you. So we're going to talk about the challenges that are facing you as regulators and how you're changing in light of them and the risks also that you're worried about. And these are three of the most innovative leading countries in the world and four of the leading agencies in the world in really creating a new generation of thinking about regulation. So I want to ask you first to talk a little bit about the how you see the primary challenges that are facing you. And Martin, let's start with you. What are the biggest things on your mind?
Thanks, Joanne. Thank you, Innovate Finance, and it's great to be here this afternoon. So the topic of this panel this afternoon is what will the regulator of the future look like? And I guess the first challenge I'd raise is for the regulator to really continue to understand fundamentally what its remit is. So for the Bank of England, that is maintaining the stability of the overall financial system, and it's ensuring the safety and soundness of the banks and insurance companies that we regulate. And since 2014, it's having a secondary competition objective or a secondary objective to facilitate effective competition within those financial services markets. So it is really first of all and first and foremost ensuring that you understand your remit as a regulator. That remit is unlikely to change materially. I'd like then to distinguish between two separate questions as to what the future regulator will look like. The first of which is, how will the regulator of the future go about doing their job? And in that context, clearly it's really about how the regulator collects, accesses, and then analyzes the vast swathes of data that are now available within the financial system. And I'm sure we'll go on to talk about a number of initiatives that the bank has undertaken, some jointly with the FCA, to ensure that we are able to realize that data. The second, though, and I think just as important, if not more important, is to really understand the drivers for change out there in the financial markets and ensure that the regulator is flexible enough to respond to those innovations. Whether those innovations come as a result of cost drivers in the banking industry, whether those innovations come from drivers of disintermediation in payments or the broader financial system, the regulator does need to be able to be flexible in the way in which it responds. And one way in which it needs to be flexible that I'd like to highlight is to ensure that it's flexible with respect to the perimeter of its regulatory boundary. This is something that must be kept under review to ensure that the remit is maintained, to ensure that you can continue to be confident that you are ensuring the stability of the system. You need to be flexible in the way in which you apply the perimeter such that you can maintain that objective going forward.
So when you talk about maintaining the perimeter, are you more worried about the risk of going beyond it or losing it? Talk more about that.
So I think maybe if I can talk about it by illustrating a few examples. So some examples of where the perimeter has already been adjusted to ensure that we maintain that flexibility. So at the moment, the Bank of England regulates systemically important interbank payment systems. Now, clearly in the field of payments, there's a lot of innovation, and not just innovation within banks. There's innovation happening outside of the banking system, payment services providers, and so on. So the bank has already committed to facilitating access to our core RTGS settlement infrastructure for payment service providers, but also alongside that adjusted the perimeter so that it is not just interbank payment systems that are within the scope of regulation, also facilitating those payment systems that aren't just interbank payment systems can be have the same degree of oversight, recognizing their potential to become systemically important in the future.
Yeah, thank you. Mark, what would you point to?
Well, I think Martin has given a great introduction. So I'm from the Australian Securities Investments Commission. Also great to be here as well, and I love this weather. And I suppose what I wanted to probably just say that we are the financial market conduct regulator, a bit like the FCA. We're also the corporate registrar. That also means that we get quite a lot of access to information which other regulators may not. So in much the same way, we focus on confident consumers and market integrity and delivering those outcomes. We don't have a competition mandate. So just pick some of those things. Engagement. So regulators today are dealing that differently. And so many of us now have modes of engagement with the fintech and RegTech sectors, which wouldn't have existed 5 or 7 years ago. In fact, making senior people available to provide informal assistance for free at a relatively timely basis is something that just didn't exist. So that mode of engagement, that's just one model. There's all sorts of other liaison engagements, hackathons, all sorts of things like that. So that's one way of staying in tune and being involved. Then I think if you look at our supervisory work, I mean, that is changing. And so this is making use of the technologies that are available, of which many in this room, the same technologies which you may be using through RegTech or SupTech could be used by ourselves. And so I can come back to examples like that.
I still think we should call it super tech.
Super tech?
Super tech sounds sort of
all right, well, it can be
but
super. But many of the same challenges about how we use that and what areas and so on. And then there's enforcement. And in the enforcement area, that's changing as well. So I can elaborate on more of those. But one area I'd probably just pick on, which given we're at a global event, is what's changing, I think, is the deeper connection between regulators. So all these gentlemen, apart from Martin, I've met before. There's regular engagement that I think will only deepen in the face of the global operations that occur in businesses.
The collaborative approach is necessary, it seems to me, between the regulator and the industry and among the regulators, because we can't learn fast enough in our separate islands, I think. And in your case, I had a chance to talk one time with your former chairman, Greg Medcraft, and one of the things you're doing, and so are other securities regulators, is basically getting reported data and big data and then using AI to monitor conduct and look for misconduct in the whole marketplace. That's a completely different way of regulating than we had 5 years ago.
Indeed. So, I mean, we will be just one of those regulators. I know Nick and Rich will be able to refer to that too. What I think I'd probably just say is that in the market space, and when financial markets, that's an area where there's a lot more data and a richer environment, and ASIC is the market regulator, so we apply real-time supervisory technologies for alerts, post-trade analytics, making use of a lot of open source technology and data scientists on that, and then there's enforcement sort of analytics and visualization tools as well. So all those technologies are being used in that area where there's deep data sets. Martin said there's a lot of information. Let me just take you to conduct regulation. Financial advice is not an area where it's digitised. So there is a challenge with the industry about the need for perhaps increased digitisation in that area and what that may then mean both for firms in the way they conduct their business and regulators. But the other machine learning area that I just want to mention is natural language processing. We've just recently put out an expression of interest for 6 trials in that area, which is everything from offer documents, promotions, right through to financial reporting, claims handling for insurance, a number of those areas, seeing whether that can aid us more efficiently do our work. We're just looking at 6 proof of concept trials, and we've had over 120 entities globally put their hands up to say, we want to talk to you about this. So that'll be a challenge about how we manage that process. Very exciting though.
Richard, you have, I'd love you to talk about this and also talk about your thinking on whether these changes are going to require regulators to potentially do some reorganizing one way or another.
Sure. I promise Joanne to be slightly provocative because we're not talking about cryptos here. So to try to keep our attention on that front.
But there was a panel here earlier,
Right.
and one of these issues of remit perimeter is what do you do when you have mold-breaking products like ICOs and you're trying to figure out which regulator is supposed to be in charge of what?
So Martin talked about parameters. If I look at financial services sector much more broadly, the fintech innovators do face challenges because there's, in any jurisdiction, I think it's quite fair to say there's more than one set of financial services regulator. If you look at the United States, whom I just come from, you have both federal regulators, and there are a few of those, and then you have state regulators. And state-by-state regulations could be quite different, even for the same financial services activity. So fintech innovators face challenges on that front, because to them, the regulation seems fragmented, it seems siloed, it can be scattergun at times. So who is really responsible for embracing and supporting innovation, right? Who is responsible for managing the risk that's coming from some of this innovation? Is the current setup the most ideal? If we have a blank slate to start off with now, is this how we will draw up the regulatory framework? Is this how we're going to regulate the industry? I would say possibly not, because by having multiple regulators, there would be inconsistency in terms of approaches, inconsistency in terms of treatment, there'll be gaps, there'll be challenges. With fast evolving innovation, with new business model coming through, it's quite difficult to as closely coordinate as possible, so that on the one hand, you support those innovation coming through, and on the other hand, you try to manage the risk that you see. So over time, I would think that we're going to see some consolidation in the regulatory structure, in the regulatory space to better support innovation, and the speed of innovation is actually putting some stress on that front. Last week, we saw China Banking Regulatory Commission coming together with the China Insurance Regulatory Commission. That is one change to better manage risk. Whether it's a result of innovation or otherwise, we're not sure. But again, I do think that we're going to see some of those changes over time to better support what is needed from the financial services sector.
So Nick, I partly saved you for last because I know the most about what you're doing, and I'm going to ask you to tell a story. But when we think about digitization, anything you digitize gets better, faster, and cheaper at the same time. And in regulation, we're not used to having better and cheaper. We've always had a binary choice. You either have to spend a ton of money to get the regulation right, whether you're in the industry compliance side or in the regulatory side, or if you try to streamline and be more efficient, you worry about cutting corners. And so the FCA has been doing some really, I think, I'll show my bias, I think it's the most exciting work in the world on thinking about how we might change the regulatory process itself, and specifically the fact that you ran a tech sprint last fall on machine executable regulation. So would you share that story?
Yeah, happily. Although I think you know it quite well, so perhaps you could present the bits that I missed out. But,
if you don't brag enough about it, I'll add some thoughts.
Okay, I'll bear that in mind. So I think when we started first thinking about RegTech, most of the technologies that we were seeing were really kind of automation plays. So taking an existing way of doing something and using technology to just do the same task but in a slightly more efficient manner. And then as we started to engage with the industry, something that came through loud and clear was actually there was an opportunity, and I think Martin and actually Richard said the same sort of thing. If you had the technology, the data assets, the intellectual capital that exists today, when you're creating a regulatory regime or a regulatory process, would you do things completely differently? And so the idea that a lot of institutions and fintechs and others suggested to us was, well, couldn't you specify your legal requirements in a form that is fully readable and executable by computers, that doesn't require human interpretation, that doesn't require, as it turns out, the significant expenditure that is dedicated to interpreting requirements. And actually at the moment what we see is where that is expended, it's expended unilaterally broadly. There is a little bit of industry collaboration, but most institutions will invest in lawyers, compliance consultants and others to interpret regulation on a piecemeal basis, institution by institution. So we started to look at actually what are some of our regulatory requirements that broadly are executed by a machine within large institutions, and which ones of those could we actually start writing the rules in a form that could be directly interpreted by a machine. So we initially started focusing on regulatory reporting. We've been working on it for 15 months, there or thereabouts. And back in November, we brought a group together for about 2 weeks, about 40 or 50 different entities, to basically try and answer the exam question of, does the technology exist to write a legal requirement in a form that is fully understandable by a machine and could be directly implemented into machine code without human interpretation or effort? And broadly, we found that the technology does exist. Some of it's a little bit flaky, frankly, but it does exist. And with the pace of technology development we see, we definitely feel confident that over the next year or two, absolutely it will exist. So we're now in a phase of much broader dialogue with the industry about, okay, what's the business case for this? What are the pros and cons of it? What does it mean in terms of our role versus your role within the industry? What kind of trust equation needs to exist within the industry in order for people to use this? And importantly, what capabilities do we need? I think we've started to touch on it, but all of these new technologies require us to modernize our internal capabilities, and this is no exception. So we think the benefits could be very, very substantial. We know the expenditure by the industry on interpreting regulation is huge, but we also know that one of the consequences of all that unilateral interpretation is that we get mixed quality of information fed back to us. We get an incoherent, inconsistent stream of data. So we think there's real opportunity to improve that quality, to reduce cost, and actually if we can get to a place where at least some of our requirements could be directly implemented by a machine, we should expect and be able to expect the industry to deliver that quicker, so we don't have to wait so long for new requirements to come into force. So it's early stage, but I think it looks very, very promising, and we're in a very open period at the moment of seeking feedback and input on that.
They put out a report on, I think, February 20th, asking for public information on this. It's very, very well worth reading. It's fascinating exactly how you did this, and moving toward the possibility of self-implementing regulatory issuances because they're coming in the form of computer code. Now, you did that through a tech sprint, which is basically a hackathon. I understand as regulators you don't like the word hack that much, so you call it a tech sprint. And I want to ask you all to talk a little bit. I think all of you touched on the need for different kinds of collaborative models, different ways of interacting with each other and with the industry. What are some of the emerging ways of doing that? How do you get into the same room and put the right kinds of people together across their very disparate skill sets and start to learn? Any of you have thoughts, Mark?
Sure. Just to kick off, so I think the fintech issue and its development has been a major driver for that. So there are numerous cooperation agreements now entered into by many regulators, but at the heart of that is meaning a lot more discussion. So there is a lot more sharing of information around what's going on, where the experiences are, where the challenges are, quite quickly. So marketplace lending, robo-advice, those topics, for example, and now ICOs and cryptocurrencies, are ones which are all generally well discussed and keeping each other abreast of. And that kind of elaboration and sharing perhaps didn't occur to the same degree. There's one other example, I suppose, which I think has more opportunity, is the supervisory space. So in the supervisory space, since the GFC, the notion of global colleges certainly emerged, and cooperation around that space. But I think there's more opportunities in these sort of territories, such as data science, what trials we're doing, where we're learning. So a lot that can be done. And I think that does mean getting people in the same place, sharing stories, to really grow and develop things quickly. So lots of opportunities to invest in that.
Do any of you do hackathons other than the FCA, per se?
So, I mean, the Bank of England jointly ran the most
that's
recent
right. I knew that, yeah.
tech sprint, not hackathon,
Tech sprint.
with the FCA. I guess a couple of other things to say in relation to this. And firstly, I think there's been excellent. I hope there's been excellent collaboration between our two organisations within the UK to provide relevant information and relevant access to those that need that access from regulatory authorities. But I would maybe just, in the context of that collaboration, it does feel like it's right that it is separate organisations with different remits bringing their own particular expertise and particular focus to these questions. I'm not sure I necessarily agree with Richard that the only answer here is to have a single body that has all responsibilities for everything, because I think you do potentially lose a degree of specificity. You do tend potentially to lose a degree of specialisation with respect to that expertise. And if there are tensions, if there are trade-offs that need to be made between different perspectives, then those are much more likely to be put out on the table and discussed up front rather than hidden in the background, perhaps behind the scenes.
And really, your sandboxes are a form of this as well, aren't they? I think all of you have sandboxes, and the Bank of England has its accelerator program. Nick and Richard, do you have different thoughts?
I think our tech sprints we didn't call them hackathons because we weren't allowed to use the word hack at the time. Actually, it's been really helpful not calling them that, because it's very easy for us to track engagement with the term, because it was somewhat a standalone brand at that point. So actually, they've been fantastically useful for us in seeing, to see some new technology up front, up close and personal, to see actually where there are problems where industry collaboration doesn't work. So I wouldn't say all 4 of our tech sprints have been resounding successes, frankly. They've had mixed success depending on the nature of the use case and the mix that we create in the course of the 2 or 3 days. We're also not sure what when they get too big. That's probably a question my team will be asking.
I think in the one in your report you said you had 100 entities and 30 entities and 100.
Yeah, and so we've got one coming up in May that will push the boat out on that. So
we're going to do another one in May on taking this to the next step and focus on anti-money laundering.
Absolutely, which is clearly a global issue. And so this will be the first one where we convene entities and regulators from around the world to participate in it. But I think there's a question about when do these large-scale, high-energy, high-interest events become too large? Actually, when do they start to have marginal benefit in terms of the scale and the size? But what we have found is that each of the tech sprints then leads to a plethora of activities off the back of it. And what we've found is that as a regulator, we have to be willing to be plugged into those in the longer term as well. We can't just do the big, high-profile tech sprint and then kind of exit stage left. We have to stay plugged in, we have to continue to be interested, we have to continue to provide our input. So I think there's a mix. There's those big events that show you're willing to use your convening authority, but then there's the one-to-one dialogue, there's the open door policy, there's the opportunity for testing in a sandbox, there's the opportunity to recommend and share institutions between different regulators. There's all these different things. I think you need to do a mix of them.
I have a podcast show. It's called Barefoot Innovation. It's free on iTunes, and Nick was my guest. I also did one with your program, Richard. And one of the things you said that really struck me in the podcast show was that you only have 7 people on your team, in the RegTech team. It's a very talented team, I know, but you have hundreds of people helping figure these things out because you've managed to build a community of people
Yep.
who really can see that we could maybe be better, cheaper, faster. If we can really be better, cheaper, and faster, everyone is in favor of it, if people believe in that, don't you think?
Absolutely. So in terms of working with the industry, I mean, just as backdrop, Abu Dhabi Global Markets is 2.5 years old now. But within that short span of time, what we have managed to do is to launch the first dedicated fintech regime in the Middle East, North Africa region, the first sandbox, we call it regulatory laboratory. I was sharing with Chris Roulat and Nick just now that other than the London FCA sandbox, which is the most active in the world, ours is the second most active. We have close to 20 fintech innovators in our sandbox now, from more than 40 applications globally. And those are really, more than 80% of the players in our sandbox are global players. 5 from the UK, we have players from US, North America, different parts of Asia Pacific, and of course, Middle East and Africa. So that's the first thing that we did with the industry, supporting growth on the innovation front, working with players. But it's good for us because then we understand some of the risks, we learn as regulators, some of the new business models coming through, and what's the best way to regulate them. What we are doing now is going beyond that. You spoke about potential cost savings. The largest cost savings in our view is industry-based solutions, shared utility, be it AML, KYC, et cetera. Those are costing the industry millions and millions of dollars. If we can find solutions, industry-based solutions that can be shared quite widely within the industry, endorsed by regulators, I think that would be perfect for the industry and result in significant cost savings. So we have just ran a proof of concept on an eKYC project with some of the largest institutions in Abu Dhabi to try to find solutions, protocols, where they can share those information, where you can just onboard customers once, and then it can be shared among the different financial institutions, and that will really be quite transformational. So we are working on some of those efforts together with the industry, and you do need the regulator involved, because even if it's just industry-based solutions, without the regulator endorsing, no, this is what is needed to gain trust and credibility and it meets the standard, those would have fallen short.
We have a question.
Can I just pick up?
Yes,
So you said, what are some of the challenges? Definitely one of the challenges for us at the moment is working out where industry utilities do and don't make sense for us, and where we can, if any, endorse them. Because we supervise 56,000 firms, and actually what fits well for some of the large market participants is not going to be the right kind of solution for some of the smaller players. And with our competition mandate, it gives us the mandate to focus on innovation and to encourage innovation, but it also means we have to be very careful about distortionary effect that we have on the market where we were, for instance, to endorse a utility. So I think it's going to be a challenge for a number of regulators knowing where they can and can't endorse industry solutions. And there are obviously pros and cons to them doing so. So I think that's going to be a challenge for all of us in the years ahead.
You're off into you're dealing with constant new problems that the rules of the road aren't clear, and it's all changing fast. We have a question from the audience. How can regulators keep up with the amount of data being created in modern financial firms and make sure you're looking at the right data? Isn't it more than just AI? And the question of how do you make sure you're being consistent in this? What is the pathway there?
It's a very good question. I mean, I'll jump in because this is another thing which regulators are doing. They've got data strategies. Chief data officers, just like other places, they are new to the territory. But it goes partly to the answer, trying to ensure that we only get the data that we're going to make use of, and we use it in the way we say we're going to use it, and we play it back to the industry in a way that they can digest it as well, and we no longer seek data which we don't make use of. So I think that's one of our challenges. I think all of us have got that, and that's partly a response to that. To one of the things that Martin said earlier, I mean, we are actually regulators that going down a path of thinking about getting some additional data in some of those conduct areas, because there are gaps there. But the fundamental questions are, for what purpose and how are we going to make use of it? And we don't want to ask for anything that we're not going to make use of.
Mm-hmm.
Yeah, I mean, I would echo that. I'd also maybe just rehearse, I'm sorry to go back to what I said at the beginning, but you do need to kind of really understand the mandate and really understand the remit. And although there is an almost infinite amount of data out there, you need to be clear about which data within the firms is relevant to your mandate, not just interesting. And kind of to build on that, the Bank of England has its own, data strategy. A lot of investment in terms of our data architecture and hardware, but a lot of it is also just processes within the organisation. Making sure that your supervisors kind of understand what they've got when they've got data, understand the consistency and the need to, clearly handle data in appropriate ways. But I mean, the questioner was relatively dismissive with respect to AI and machine learning, but we should be prepared to embrace what is possible with respect to these new techniques with respect to that. I know that the Bank of England economists have published a number of research papers articulating how machine learning techniques can be deployed within the Bank of England, within central banks, within macroprudential authorities to get to the heart of some of these questions.
Our time is up, so I'm going to ask you to each answer this question from the audience with a yes or a no. It is, can you foresee regulatory processes becoming leaner and simpler, focusing on particularly critical matters rather than becoming ever more complicated? Richard?
Yes, definitely. I do think that a lot of solutions or possible solutions that we are exploring now, we mentioned a lot of data is true, regulators have to contend with a lot of data, but that also gives us insight into possible risks, predictive powers, and is also how the data are being presented in terms of digestible format for regulators to make a decision on the various matters. So definitely a yes.
Nick, can you foresee it?
I'll go for a yes, but not in the very short term, I think is probably my answer. So I think a lot of people have talked about the challenges of processing and managing and handling all this data, but there is profound opportunity in it for us to develop much more robust predictive capabilities than we have at the moment. I think once we do that, then you should expect to see regulation becoming more streamlined. But it's going to take us, we've got a lot of learning to do.
Maybe one of these things is going to be hard to see the progress for a long time, and then suddenly it will come together. Martin, how's your answer?
I would also have to say yes, but just to echo, I mean, there's a lot of hard work ahead if it's to become a reality.
And I'd say yes too. I'd probably just leave these challenges ahead. I think there could well be a curve where there's a bit of a up in terms of data demand and challenge before the efficiencies come, and clearly I think in the contact world. And I think the second challenge is the roles and relationships, which Nick referred to earlier, but the role of the firm, the role of the consumer, and the role of the regulator in that environment are all good things we're going to need to ask ourselves.
I will answer yes as well. I work with regulators all over the world, and this is a different kind of thinking than we've ever had before, and it's very exciting to see the leadership that all of you and your agencies are bringing to this. So please join me in thanking the panel.